business correspondent Christine Romans is here with us. Christine, okay, if you weren't paying attention on Friday afternoon, you were off work or on a trip, break down exactly what happened here with SVB.
Yeah, the anatomy of a collapse of a big bank and the anatomy of a rescue from the federal government. Let's look at how we got here. First of all, what is SVB? It is the epicenter of tech startups, venture capital, Silicon Valley Bank. It is the 16th largest bank, or it was, in the United States. And this is really the oxygen for technology. The technology sector really goes through SVB. So a very important bank here. By the end of 2022, it had $175 billion in total deposits. And here is the anatomy of the bank run, right? This is how much money it had at the end of the year. Just on Thursday, there were $42 billion in withdrawals from depositors, right? So something happened here where people wanted to take their money out, and this bank unraveled here. So what happened? Why did they get there? Well, this is a company that for years took deposits in the good times when interest rates were very low, and it grew and grew and grew. And those deposits grew, and it put that money into long-dated treasuries, into treasuries, safe, super safe treasuries, right? So this is how much they had. At the end of 2022, $128 billion worth of treasury. Look, that is amazing how much it gained. But then as things started to go south, when interest rates were rising, those were less valuable, and the company actually was selling those treasuries at a loss. When that word got out, people got nervous. The stock in the bank started to decline. Depositors started to withdraw their money. They were also withdrawing their money because technology, that sector, was in a downturn, right? And so instead of putting money into the bank, depositors were taking money out of the bank, and the bank could not sustain it. Come to the rescue, the United States government. The FDIC is going to insure up to $250,000 in normal times, and now you're going to have this facility so that above that level, everyone will be made whole. Not the bondholders and not the stockholders of the bank, we should be pointing out, but the people who have their deposits in that bank. Also, Signature Bank. This is the other shoe to drop this weekend. This is a bank that specializes in services for law firms. It also got into big trouble. The government will also back the depositors there. So a really important weekend of developments. You guys, this could have been a very different morning if we didn't have the Treasury and the Fed working all weekend to try to make sure that folks were made whole. And I'll say, this is because interest rates rose so dramatically, something was going to break in the economy, right? And this is what broke, guys.
Yeah, and that comes as the Fed chair is only warning that interest rates are going to continue to rise. Christine Romans, we'll wait to see what the markets say when they open. Thank you.
With us now, CNN business correspondent Rahel Solomon and Wall Street Journal senior special writer Justin Baer. Good morning. By the way, Justin's latest reporting is headline, How Silicon Valley Turned on Silicon Valley Bank. So good to have both of you on. I was reading your notes and what you wrote about this. You have been very strong about this and tough on what you are calling this a bailout. You said there's no other way of putting it. This is a bailout no matter what terminology you want to use.
Yeah.
Why are you saying that?
Well, I mean, clearly there are some that are getting bailed out, right? You know, the depositors of these particular banks are, many of which are companies, right? They need to make payroll. The money was trapped in these institutions. And so the government took extraordinary actions to allow them to access that money, right? Even as those banks were going through receivership and had failed. So whether, again, the taxpayer money was used to implement those plans, the government said no, but clearly there was a rescue of a particular group of people and businesses.
Mm-hmm. So, Rahel, one of the things that MJ noted that's really important is what the government's doing now, and they're setting up this emergency lending facility. So part of the reason that SVB got into a lot of trouble is that they had to sell these long-term treasuries at a loss. Then they went out to try to capital raise last Wednesday.
That spooked.
Try to get $2 billion, and they saw, and depositors, and investors saw the loss and pulled out money and saw you're selling these at a loss because interest rates have gone up. Your securities aren't as attractive anymore. Yep. What the government's doing now would prevent against someone else having to do a capital raise like that, right?
Right, that's exactly it. Banking is all about confidence, right? Confidence in the system, confidence that if you or I or anyone here at this table puts their money into a bank, if we need it tomorrow, that money will be there. What happened here with SVB was a lack of confidence. And so you started to see all of these depositors rush to get all of their money out, and that's what led to this panic. So what the Fed is trying to do and what regulators are trying to do here is to prevent that from happening again, right? Sort of insulate the risk here, insulate the contagion so that this doesn't spread beyond an SVB story. And that's why you saw officials.
In layman's terms, this is an old-fashioned, is it an old-fashioned run on the bank is what
Absolutely,
happened?
100%.
Yeah.
And I mean, I spoke to a founder who had a lot of her money in this bank last night, and she said that, the tech community is very small. The VC founder community is very small. She said early last week, text messages were starting to go around. It became chatter. And as the days went on, screenshots were going around in terms of, hey, my investor said, pull your money. And so it really did lead to a high-tech problem in terms of tech, but really leading to an old-fashioned bank run.
Yeah, I think Patrick McHenry from North Carolina said it was a Twitter-fueled bank run because these are all very online people who were all talking about those messages. This $250 cap, they're basically waiving it with the steps that we're seeing yesterday. I think over 90% of SVB's funds were uninsured. So are they going to permanently raise it now? Is it just completely ineffective? What is even the point of the $250,000 cap?
I mean, that's the open question, right? Because I think some of the added steps, including that fund that was established, is there to support other banks if they find themselves in a similar situation, right? They can borrow from the government. They can post collateral at par, essentially making it a lot less expensive in order to borrow, and in the event that there is some kind of run. But in this case, they decided to waive plow right through that deposit insurance cap, in allowing these, what are essentially in most cases companies, right, that have a lot of money at these institutions.
Are you surprised that they didn't get acquired over the weekend?
I think that was certainly part of the process, right? So the FDIC had initiated an auction for SVB. It didn't, obviously there was no winning bid for that auction. I think it's possible that we could see other assets that get sold in the coming days. We saw overnight, or rather this morning, HSBC step in and buy the UK arm of Silicon Valley Bank. So there are interesting businesses in both of these banks that could warrant some interest. It could be some more deals that we see.
Yeah, I think they said that J.P. Morgan and PNC among the suitors, so SVB holding company, which would exclude the SVB bank part of it. But I think you raised a very good question about the question about the Feds, whether the Feds will listen to what has been said to stop raising rates because this contributed to it. Everyday folks are concerned about this. This isn't just tech people. This isn't just people who have private equity. This affects all aspects of the economy. So if people are at home, Rahel, and they're sitting there wondering, as they have been all weekend, am I affected by this? What do you say to them?
Look, it's a great question. I mean, I think we are all so connected in terms of banking. I think the big difference here is that this was largely a very sort of insulated bank, right? A big bank nonetheless, but sort of focusing on a specific sector of the economy.
A very important Republic?
Yeah, a very important part of the economy, but a secular sort of insulated part of the economy. I think the reason why the Fed stepped up as quickly as they did is to prevent the risk to people like everyone watching at home, right? To protect other regional banks so that we have confidence in the banking system, and that's why we saw the type of rapid response that we did.
I don't know, Justin. I mean, you point, First Republic was down like 30%. That we have images of these long lines of people going to First Republic over the weekend trying to take money out. They're standing, that but Signature's not. And these are not just banks that cater to Silicon Valley. You wrote in your piece about how this exposes some of the vulnerabilities that we still have.
The banking system.
Sure. Well, as you said earlier, I mean, this is all based on confidence, right? And the whole financial system, any financial institution is dependent on the ongoing confidence. So once that's lost, or once it becomes lost, it can lead to what we saw this past week, right? And that can flare up elsewhere very quickly. Which again is why you saw the government go beyond just looking at these two institutions over the weekend, but saying, well, how do we avoid seeing other lenders, particularly those that again, the regulations have changed over the past decade with respect to smaller and medium-sized banks. How can we protect and insulate those, not only those banks, but more importantly, their customers? Is it just
because they're smaller, medium-sized banks, or is it because they're holders of a lot of mortgages, for example?
I mean, all of the above, right?
Yeah.
So every bank's balance sheet is going to look a little bit differently, right? I mean, everyone has had to deal with the impact of rising interest rates. Some did so, obviously, a lot more prudently than others, right? And so there will be others that will resemble in some ways the way Silicon Valley Bank looked, right? And we see some of the other names get very quickly attached to what happened to them last week. But again, we'll have to see. It's all based on confidence.
Well, it's going to be interesting to see what happens as we get closer to the markets and the day the banks start opening up.
And some of them have actually opened up higher. I mean, some of them have actually been higher on this event.
We're going to be watching that. The president's going to speak. There's going to be a lot to deal with this. Thank you, Rahel. Thank you, Justin. We appreciate that.